Hey everyone, Ken Angst, Hope Prop Envy, Thanks Real Estate Team. Hey, welcome back to our channel this week. If you haven't been here in a while or you're new to our podcast, our mission is very simple. We're going to fill you in on everything to do with real estate in Northern Nevada, specifically Reno, Sparks area. How we're going to do that is we're going to have podcasts on a weekly basis and talk about some of the top tools that we use in our business. In addition, we're going to talk to some of the top professionals in the real estate industry, top lawyers, accountants, insurance, home inspectors, lenders, title people. So if you like our content, please subscribe above and turn on notifications so that you can get our content as it becomes available. 2 weeks ago, I had the special opportunity to attend a class with one of the top tax specialists specifically for real estate in the industry, and his name is Chris Bird. Now, Chris covered the course was for 8 hours, and for 7 of it was specifically for realtors. But for 1 hour, he went into all the different tax implications of owning a rental. So if you own a rental property, you're going to want to watch the video that's coming up behind this trailer, because he kind of talks about the 5 biggest mistakes that real estate investors are making. So I hope you guys enjoy his interview. He was gracious enough to join me after class and give me an 8-minute interview. Enjoy it and leave any questions or comments below, and we'll look forward to talking to you soon. Thanks.
And Ken, this subject is really a good subject for you to select. And my background, everybody goes into the fact that I'm an ex-IRS agent, was an IRS agent for 16 and a half years, but now the IRS for a lot longer than I was in. But I also own a lot of rental property. When I say that, my wife and I own a lot of rental property. And I'd like to talk to you just from the standpoint of a investor and from the perspective of an accountant, and maybe a little IRS there too. But one of the biggest mistakes people make, and I'm just amazed by this, is people think that they don't have to depreciate a property. And let me tell you what, I get this periodically where somebody, a new client, will own a property in like a 9-unit building. They'll do their own return, which is the biggest mistake of all. You got to have a good accountant. You just got to have a good accountant that understands rental real estate and all the tax aspects of it. But they'll come in and they'll tell me they sold the building in 2019. And then I asked them to look at their depreciation schedule for me to calculate how much profit they're going to have, and then the tax that they're going to owe. And lo and behold, the thing is not even on their depreciation schedule. They've never depreciated it. And here's a term you've all got to come to terms with. When you own a building, you are required to take depreciation. And when you sell it, the term is you have to recapture your depreciation allowed or allowable. And the word allowable is the one that catches people that haven't taken their depreciation. So the double-edged sword there is you sell a building and you haven't taken depreciation. When you sell it, you have to pay tax on the recapture that you never claimed, and that's really kind of a troubling issue. Now, this goes deeper than just that, though, for one thing. There's a special provision in the tax code, whereas if you have missed depreciation, you can do certain things in the year you sell the property to claim all the missed depreciation. And you have to file a form 3115-3115 with the IRS, and you need a good accountant that understands this, because they can make the depreciation allowed or allowable kind of go away. But the point is, I want you all to remember to claim your depreciation every year, and then you don't have a problem. Now, another issue, you need to find a good accountant that understands rental real estate. And something I would tell you is, does this accountant own rental property themselves? Because if they do, they have just a deeper level of intuition, understanding about what you'll see. So
I kind of want to cut in there. We have all these people, 4 or 5 of the top accountants in town for rental real estate. So if you're looking for a good one or kind of questioning what you currently have going on, feel free to give us a call in the office and kind of discuss that.
Well, I agree, and let me tell you what, the big thing there, Ken, is that you don't find a preparer through the yellow pages or any amount of advertising. You find a good preparer from the peer referral of your equals that also own rental real estate.
Hey, thanks for watching our discussion with Chris Bird today on depreciation of your rental properties. What we're going to do is we're going to actually split this into 2 separate episodes. because coming up behind next week, what we'll talk about with Chris are some other important details on tax implications for real estate investors like yourselves. We're going to talk specifically about the qualified business income deduction, and then also the depreciation of various items within a rental. So stay tuned. Come back next week, and we'll wrap up our interview with Chris. Thanks again for your continued support of our channel, and we'll look forward to talking to you soon. Thanks.